Based on the provided data for Bitcoin, a short-term investment strategy appears to be the most suitable approach. The forecast price suggests a downward trend over the next week, with prices potentially dipping below the current levels. This aligns with the recent price history, which shows a decline from the initial peak. Therefore, a short position on Bitcoin is recommended. The entry price should be set around $94,700, allowing for a small margin above the current price to avoid immediate losses. A stop-loss order should be placed at $95,300 to limit potential downside risk if the price unexpectedly surges. The target price for this short position is set at $92,700, aiming to capitalize on the anticipated price decline. This strategy aims to capture short-term profit from the predicted downward movement in Bitcoin's price. Based on the provided information about Bitcoin Cash, a cautious approach is recommended for the short term. The 2-week price change reveals a mixed trend, with recent fluctuations indicating uncertainty. The forecast predicts a continued downward trajectory, suggesting a potential bearish market sentiment. While the support price at $415.90 offers a potential floor, the resistance at $445.70 presents a significant hurdle for upward movement. Considering these factors, a short position appears more suitable for the short term. An entry price around $440 could allow for capturing potential downside momentum. The stop loss should be placed slightly above the recent high at $445.70 to minimize risk. The target price could be set at $415.90, aligning with the support level, aiming to capitalize on the forecasted decline. This strategy prioritizes risk management while seeking to profit from the anticipated downward price movement. Based on the provided information for stacks, a bearish investment strategy is recommended for the short term. The 2-week price change reveals a downward trend, and the forecast predicts further declines, reaching as low as $1.31. This suggests that the price is likely to continue falling in the near future. The current price is relatively close to the support level of $1.485, indicating that there may be some buying pressure at these lower levels. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current price around $1.57. The stop loss should be set at $1.637, the resistance level, to limit potential losses if the price unexpectedly rises. The target price should be set at $1.485, slightly above the support level, aiming to capture a portion of the anticipated decline. This strategy capitalizes on the bearish momentum and aims to profit from the price drop while mitigating risks with a defined stop loss. Given the price trends and forecast for Ethereum, a cautious investment strategy would focus on a short-term approach. The historical prices show a volatile pattern with fluctuations around the $3,350 level. The forecast suggests further consolidation around this level, with prices potentially dipping slightly below $3,350. The support price at $3,333.69 indicates a potential floor for the price, while the resistance at $3,497.19 suggests an upper limit for the near term. In this scenario, a short position could be considered to capitalize on the potential for a dip below the current price. An entry price of $3,380 would be suitable, aligning with the current price and the forecasted downward movement. The stop loss should be set at $3,400 to protect against any unexpected price surge. The target price should be set at $3,300, allowing for a modest profit if the price falls towards the support level. This strategy emphasizes a cautious approach, aiming to capitalize on short-term price fluctuations while minimizing potential losses. Given the price trends and forecast for Ripple, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend, with the current price near the support level of $2.0566. The forecast indicates a potential for further declines, suggesting a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $2.20 aligns with the forecasted price and provides a reasonable margin above the support level. The stop loss should be set at $2.28 to protect against any unexpected price recovery. The target price should be set at $2.08, slightly above the support level, allowing you to take profits before the market hits major support at $2.0566. Based on the provided price information for Binance Coin, a short-term investment strategy focusing on a long position appears to be promising. The historical price data reveals a generally upward trend, with recent fluctuations around the $690 to $705 range. The forecast price also suggests continued upward movement, reaching $710 in the coming week. This indicates potential for capital appreciation in the short term. Considering this bullish outlook, an entry price around $690 would be suitable, aligning with the current market price and providing room for potential growth. A stop loss could be set at $680 to mitigate risk in case of an unexpected price reversal. The target price could be set at $715, aiming to capture a significant portion of the projected price increase while leaving some room for further potential upside. This strategy allows for participation in the anticipated upward momentum of Binance Coin while managing risk effectively through a well-defined stop loss. Based on the provided historical price data and forecast for Stellar, a cautious approach with a medium-term investment perspective appears most suitable. The historical prices show a slight downward trend over the past 2 weeks, with the recent forecast indicating further declines. However, the price remains above the significant support level of $0.3308, suggesting potential for a rebound. Therefore, a long position is recommended with a conservative entry price around $0.340, slightly above the current price and below the recent resistance. The stop loss should be set at $0.331, protecting against a significant drop below the support level. The target price should be set at $0.360, aiming for a moderate gain as the price potentially recovers towards the resistance level. This strategy allows for potential upside while mitigating risk through a well-defined stop loss. Based on the provided price history and forecast for Toncoin, a short-term investment strategy appears to be the most suitable approach. The historical prices show a fluctuating trend, but the forecast suggests a slight downward movement in the coming week. While the current price is close to the support level, the resistance is relatively high, indicating a potential for consolidation or a minor pullback. Considering this, a short position on Toncoin could be considered. An entry price around $5.60 would allow for capitalizing on any downward movement towards the support level. A stop loss could be placed at $5.70 to limit potential losses if the price unexpectedly rises. The target price could be set around $5.40, aiming to profit from the anticipated downward trend while remaining conservative. This short-term strategy allows for taking advantage of the potential price dip within a limited timeframe. Based on the provided Cardano price information, a cautious investment strategy would be advisable. The 2-week price history reveals a fluctuating trend with a slight downward bias. The forecast indicates a continued downward trajectory, suggesting a bearish outlook for the short term. The support price of $0.7498 acts as a crucial level to watch, as a break below this level could signal further declines. Therefore, a short position on Cardano appears to be more suitable for the current market conditions. An entry price around 86 cents, slightly above the current price and recent lows, would allow for some room for price fluctuation before entering the trade. The stop loss should be set at $0.883, the recent resistance level, to limit potential losses if the price unexpectedly moves upwards. The target price could be set at 75 cents, aligning with the support level, allowing for a potential profit if the bearish forecast materializes. This strategy emphasizes risk management and capital preservation, aiming for modest gains in a potentially volatile market. Based on the provided Litecoin data, a short-term investment strategy appears most suitable. The 2-week price change demonstrates a slight upward trend, but the forecast suggests a plateauing or slight decrease in the coming week. This indicates a potential opportunity to capitalize on a short-term correction. Therefore, an aggressive short-term investment strategy would involve taking a short position on Litecoin. A suitable entry price would be around $102, aligning with the forecast's initial dip. The stop loss should be set at $106, slightly above the recent high, to limit potential losses if the price unexpectedly rises. The target price could be set at $99, aiming to capture a modest profit before the price potentially recovers. This strategy leverages the forecast's indication of a short-term dip while managing risk through a well-defined stop loss. Based on the provided Swaycoin price information, a cautious investment strategy focusing on the short term seems most appropriate. The 2-week price history demonstrates a fluctuating trend, with recent fluctuations suggesting a period of consolidation. The forecast price indicates a slight downward movement in the coming week, aligning with the recent price action. However, the support price of $3.7846 provides a strong foundation, suggesting that further significant declines are unlikely in the short term. Therefore, a short-term bearish strategy could be considered. An entry price around $4.19, near the recent highs, would allow for capturing potential downward movement. A stop loss could be set at $4.21, slightly above the current price, to limit potential losses. The target price could be set at $4.08, aligning with the recent lows and the projected downward movement. This strategy aims to capitalize on the anticipated short-term decline while mitigating risk through a well-defined stop loss. Based on the provided information for Aptos, a short-term investment strategy appears most suitable. The 2-week price change demonstrates a downward trend, and the forecast predicts further declines in the coming week. While the support price is at $5.75, the current price is significantly higher, suggesting a potential for a pullback towards this level. Therefore, a short position on Aptos is recommended. An entry price of $9 would allow for capturing potential downward movement. The stop loss should be set at $9.30 to mitigate risk if the price unexpectedly surges. The target price could be set at $8.50, aiming to profit from the anticipated decline while leaving room for potential fluctuations. This strategy capitalizes on the short-term bearish outlook for Aptos, seeking to generate returns from a price correction towards the support level. Based on the provided price history and forecast for SE, a short-term bearish strategy appears most suitable. The price history shows a downward trend, and the forecast predicts continued decline over the next week. The support price at $0.3377 acts as a potential floor, while the resistance at $0.4185 indicates limited upward momentum. Therefore, I recommend entering a short position at the current price of approximately $0.402. A stop loss should be set at $0.4185 to limit potential losses if the price unexpectedly surges. The target price could be set at $0.3377, aiming to capture the potential decline towards the support level. This strategy capitalizes on the short-term bearish outlook for SE while managing risk through a defined stop loss. Based on the provided information for Ethereum Classic, a short-term bearish investment strategy is recommended. The 2-week price change shows a downward trend, and the 1-week forecast predicts further declines. The price is currently near the resistance level of $25.98, suggesting a potential for a pullback. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current market price of $25.98. A stop loss should be placed at $26.25 to protect against unexpected price surges. The target price should be set at $24.33, aiming to capitalize on the anticipated decline towards the support level. This strategy capitalizes on the current market conditions and aims to generate profits from the expected price drop in the short term. The historical price data for Polygon suggests a period of consolidation and slight downward pressure. While the forecast indicates a continued decline over the next week, the current price is hovering near the support level of $0.3594. This suggests that a short-term investment strategy could be considered, aiming to capitalize on the potential for further downward movement. Therefore, a short position on Polygon is recommended for an aggressive short-term investment strategy. An entry price of $0.466 could be considered, aligning with the current price near the support level. The stop loss should be set at $0.4733, slightly above the current price and the recent resistance level, to protect against any unexpected upward movement. The target price should be set at $0.425, aligning with the forecasted lowest price for the week, allowing for potential profit taking before the price potentially reaches the support level. The provided information suggests a bearish outlook for AEVO. The 2-week price change exhibits a downward trend, and the forecast predicts continued declines over the coming week. The support price is at $0.3319, indicating a potential floor for the price, while the resistance sits at $0.3827, suggesting an unlikely upward breakout in the near term. Given this scenario, a short-term investment strategy focusing on a short position appears most suitable. An aggressive short-term investment strategy could involve entering a short position at the current price, around $0.362, with a stop loss set at $0.379 to limit potential losses. The target price could be set at $0.3319, aiming to capitalize on the predicted decline towards the support level. This strategy leverages the bearish forecast and aims to profit from the potential price drop in the short term. Based on the provided historical price data and the forecast for optimism, a short-term bearish strategy appears to be the most prudent approach. The historical prices show a downward trend over the past 2 weeks, with the forecast indicating further declines in the coming week. The forecast suggests a potential drop from the current price level to approximately $1.67. Given this outlook, a short position on optimism seems suitable. An aggressive short-term investment strategy could involve entering a short position at the current market price, with a stop loss set at $1.92, slightly above the recent resistance level, to limit potential losses. The target price could be set at $1.70, aiming to capitalize on the anticipated price decline. This strategy capitalizes on the bearish sentiment indicated by both the historical price data and the forecast, aiming to profit from the potential downward movement of optimism. Based on the provided data for STRK, a short-term bearish strategy appears to be the most suitable. The 2-week price history demonstrates a downward trend, with the forecast indicating further declines. The current price hovers near the support level of $0.4667, suggesting potential for further downward movement. Therefore, an aggressive short-term investment strategy would involve opening a short position at the entry price of $0.471. A stop-loss order should be placed at $0.483 to limit potential losses if the price unexpectedly surges. The target price for this strategy is set at $0.457, aligning with the lowest forecasted price. This approach aims to capitalize on the anticipated price decline while managing risk through a defined stop-loss. Given the price trends and forecast for Solana, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend in the recent 2 weeks, with the forecast indicating further declines. The support price is at $184.22, and the resistance is at $195.42. This suggests that the price may continue to consolidate around the support level in the short term. Therefore, a short position is advisable to capitalize on the potential for a price decrease towards the support level. An aggressive entry price could be around $190, aligning with the current price and the forecasted decline. The stop loss should be set at $195 to protect against any unexpected price recovery. The target price could be set at $185, allowing you to take profits before the price reaches the support level. Given the provided price history and forecast for Jupiter, a short-term investment strategy appears most suitable. The 2-week price change shows a downward trend, and the forecast predicts continued declines, suggesting a bearish outlook. The current price is hovering near the support level of $0.7993, indicating potential for further downside movement. Therefore, an investment strategy focused on a short position with a target price of $0.760, slightly above the lowest forecasted price, seems prudent. The entry price should be set at 82 cents, slightly above the current price to allow for some room for price fluctuation before entering the position. A stop-loss order should be placed at $0.843 to limit potential losses if the price unexpectedly moves upwards. This strategy aims to capitalize on the anticipated price decline while managing risk effectively. Given the price trends and forecast for render, a cautious investment strategy would focus on a short-term approach. The historical prices show a fluctuating trend with a slight downward bias, and the forecast indicates a continued decline. The support price sits at $5.059, suggesting a potential floor for the price, while the resistance is at $7.159, indicating a significant hurdle for upward movement. Considering this, a short position is advisable to capitalize on the anticipated price decrease. An entry price around $6.85, slightly above the current price and recent lows, would allow you to enter the trade with room for price movement. The stop loss should be set at $7.01, slightly above the entry price, to limit potential losses. The target price should be set at $5.1, aiming to capture a significant portion of the projected decline before reaching the support level. This strategy prioritizes risk management and aims to profit from the short-term bearish outlook for render. Given the provided price history and forecast for Solana name service, a cautious approach is recommended for this investment. The historical prices show a volatile trend with periods of both upward and downward movement. While the forecast suggests a continued downward trend in the coming week, the price is currently near its support level of $0.2404. This indicates a potential for a bounce back in price, making a long position risky. Therefore, a short-term short position is advised, capitalizing on the potential for a further decline in price. An entry price of $0.255 aligns with the current price and allows for a modest profit potential. The stop loss should be set at $0.267 to protect against any unexpected price surges. The target price can be set at $0.238, slightly above the lowest forecast price, allowing for a reasonable profit margin while minimizing risk. This strategy allows for a balanced approach, acknowledging the potential for a price rebound while capitalizing on the bearish forecast. Given the current price trend and the provided forecast for Doge-Coin, a short-term investment strategy appears to be the most suitable approach. The historical prices show a slight downward trend in the recent 2 weeks, and the forecast indicates further decline over the next week. The support price at $0.31201 suggests a potential floor for the price, while the resistance at $0.4081 indicates a significant barrier to upward movement. Therefore, a short position is recommended. An aggressive entry price could be around $0.324, aligning with the recent price action and the forecast. The stop loss should be placed above the entry price at $0.337 to minimize potential losses if the price unexpectedly rises. The target price could be set at $0.298, slightly above the lowest forecasted price, allowing for a potential profit while mitigating the risk of a significant price drop. This strategy capitalizes on the anticipated short-term decline in Doge-Coin while managing risk through a well-defined stop loss and target price. Based on the provided PEPE price information, a cautious investment strategy would focus on a short-term approach. The historical prices demonstrate some volatility but lack a clear upward or downward trend. The forecast suggests a slight decrease in price over the next week, aligning with the recent price fluctuations. The support price at $0.0000193 provides a potential floor for the price, while the resistance at $0.0000242 indicates a ceiling for potential growth. Considering these factors, a long position is not recommended at this time due to the uncertain price direction. A short position, however, could be considered for a short-term investment. An entry price around $0.0000187, slightly above the current price, would allow for potential profit if the forecast price decrease materializes. The stop loss should be set at $0.0000193 to limit potential losses if the price unexpectedly rises. The target price could be set at $0.0000176, aligning with the lowest predicted price in the forecast. This strategy aims to capitalize on a short-term price dip while managing risk through a well-defined stop loss. Given the provided price information for SHIB, a cautious short-term investment strategy appears most suitable. The historical price data exhibits a slight downward trend over the past 2 weeks, and the forecast suggests a continuation of this trend with prices potentially dropping below the current level. While the support price provides a potential floor for the price, the resistance level remains relatively distant. Therefore, a short position at the current price, around $0.0000215, would be a reasonable entry point. A stop-loss order should be placed at $0.0000225 to limit potential losses if the price unexpectedly surges. The target price for this short position could be set at $0.0000205, aiming to capture a modest profit as the price potentially declines towards the forecasted levels. This strategy emphasizes risk management and capital preservation, seeking to capitalize on the anticipated short-term downward movement in SHIB. Based on the provided information for Dog with Hat, a short-term bearish investment strategy appears to be the most suitable approach. The 2-week price change shows a downward trend, and the forecast predicts further declines in the coming week. The historical price data also supports this bearish outlook, with the price hovering near the support level of $1.818. Given these factors, opening a short position at the current market price, around $1.83, seems prudent. To manage risk, a stop-loss order should be placed at $1.92, slightly above the recent price highs, to limit potential losses if the price unexpectedly rises. The target price for this short position could be set at $1.67, aligning with the lowest forecast price. This strategy aims to capitalize on the anticipated price decline while mitigating potential losses through a well-defined stop-loss order. Based on the provided information for Doge-Coin, a short-term bearish strategy appears to be the most suitable. The 2-week price history shows a general downward trend, and the forecast predicts further declines over the next week. The current price is hovering near the support price, suggesting a potential for further downward movement. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current market price of approximately $0.00622. The stop loss should be set slightly above the current price at $0.0063 to minimize potential losses from an unexpected price surge. The target price could be set at $0.0060, aligning with the forecast and allowing for a reasonable profit margin before the price potentially finds support. This strategy capitalizes on the anticipated short-term decline in Doge-Coin's price while managing risk through a well-defined stop loss. Based on the provided data for Near Protocol, the 2-week price change reveals a downward trend. The forecast further suggests continued declines, with the price potentially dropping from the current level towards the support price of $4.329. Considering this bearish outlook and the forecast, a short position appears to be the most suitable strategy for the short term. An aggressive short-term investment strategy could involve entering a short position at the current market price, around $5.03. The stop loss should be set slightly above the current price, at $5.12, to minimize potential losses if the price unexpectedly rises. The target price should be set at $4.86, aligning with the lowest forecasted price, allowing for profit-taking before the price potentially bounces back. This strategy capitalizes on the anticipated price decline while managing risk through a well-defined stop loss. Given the price trends and forecast for Internet Computer, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend over the past 2 weeks, with the current price hovering near the support level of $9.422. The forecast suggests a continued decline in the coming week, with prices potentially dropping below the current support level. While there is a slight possibility of a rebound, the overall outlook is bearish in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $9.95 aligns with the current price and the forecasted decline. The stop loss should be set at $10.05 to protect against any unexpected price surges. The target price should be set at $9.35, slightly above the support level, allowing you to take profits before the market hits major support and potentially reverses. Based on the provided injective price history, forecast, and support/resistance levels, a short-term bearish strategy appears most suitable. The historical price data reveals a downward trend, and the forecast predicts continued declines. The price is currently hovering near the resistance level, suggesting a potential for a pullback. Therefore, an investment strategy involving a short position is recommended. An entry price of $20.50, aligning with the recent price action and the forecast, would be appropriate. The stop loss should be set at $21.33, the resistance level, to limit potential losses if the price unexpectedly surges. The target price should be $18, aiming to capitalize on the anticipated price decline. This strategy capitalizes on the short-term bearish outlook and aims to generate profits from the expected price drop. The BTC price data suggests a bearish short-term outlook. The 2-week price change shows a downward trend, and the 1-week forecast indicates further declines. Considering the support and resistance levels, a short position seems appropriate. An aggressive short-term investment strategy could involve entering a short position at $473, the current price. The stop loss should be set at $484, slightly above the recent high, to protect against potential upward movements. The target price could be set at $448, aligning with the forecast's lowest point, allowing for profit-taking before reaching the support level. This strategy aims to capitalize on the anticipated price decline within the next week. Given the current price trends and forecast for THETA network, a short-term investment strategy appears most suitable. The historical price data shows some fluctuations, but generally remains within a range. The forecast indicates a slight downward trend in the coming week. The support price at $2.155 acts as a potential floor for the price, while the resistance at $2.376 suggests limited upside potential. Therefore, a short position is recommended to capitalize on the anticipated price decline. An aggressive entry point could be around $2.32, slightly above the current price, allowing for some price movement before entering the trade. The stop loss should be set at $2.37, above the entry price and the resistance level, to minimize potential losses. The target price could be set at $2.16, aiming to profit from the forecast decline while staying above the support price. This strategy allows for a short-term play on the anticipated price movement of THETA network. Based on the provided data for WorldCoin, a short-term bearish strategy appears most suitable. The 2-week price history shows a downward trend, with the forecast predicting further declines. While the support price sits at $2.07, the forecast suggests prices could drop to as low as $1.87. This indicates a high probability of the asset's price continuing its downward trajectory in the near future. Therefore, an aggressive short-term investment strategy would involve opening a short position at the current price, around $2.19, with a stop loss set at $2.23 to minimize potential losses if the price unexpectedly rises. The target price should be set at $2.05, aiming to capitalize on the predicted price decline while staying ahead of the support level. This strategy leverages the bearish sentiment indicated by both the price history and the forecast, aiming to profit from the anticipated downward movement of WorldCoin in the short term. Based on the provided information for Hooked Protocol, a cautious investment strategy with a medium-term perspective appears most suitable. The recent 2-week price history demonstrates a fluctuating trend, failing to establish a clear upward or downward momentum. The forecast suggests a slight dip in the coming week, hovering around the support price. This indicates a potential for consolidation or a sideways movement in the short term. Given this outlook, a long position could be considered with an entry price around $0.418, slightly above the forecast's lowest point. This allows for some margin of safety while capturing potential upside if the price rebounds towards the resistance level. A stop-loss order should be placed at $0.4044, the support price, to limit potential losses. The target price could be set at $0.4429, the resistance level, aiming for a moderate gain within a few weeks. This strategy balances risk and reward, capitalizing on potential upside while mitigating potential downside. Given the historical price data and the provided forecast for Artificial Superintelligence Alliance, a cautious investment strategy leaning towards the short term appears most suitable. The 2-week price change shows a slight downward trend, with the forecast indicating further declines. While the support price at $1.131 provides a floor, the resistance at $1.362 suggests limited upward potential. A short position at the entry price of $1.30, aligning with the current price and the forecasted decline, could be considered. To manage risk, the stop loss should be set at $1.35, slightly above the current price and below the resistance level. This would limit potential losses if the price unexpectedly rises. The target price for this short position could be set at $1.20, aiming to capitalize on the predicted decline while leaving room for potential price fluctuations. This strategy prioritizes risk management and capitalizes on the short-term bearish outlook indicated by the price data and forecast. Given the price trends and forecast for Polkadot, a cautious investment strategy would focus on a medium-term approach to capitalize on the potential for a price rebound. While the 2-week price change shows a slight downward trend, the forecast suggests a gradual decline over the next week, with prices potentially reaching a low point around $6.26. The historical prices, however, indicate a strong support level at $5.992, suggesting a potential bounce back. This scenario suggests a long position to capitalize on the potential for a price increase towards the resistance level of $7.551. An entry price of $6.75 aligns with the forecasted price and allows for a margin of safety. The stop loss should be set at $6.55, slightly below the next forecasted price, to protect against further downside movement. The target price should be set at $7.37, a significant resistance level, allowing you to take profits before the market potentially experiences a pullback. This medium-term approach allows you to ride out the potential short-term dip while aiming for a more substantial price increase in the medium term. The provided historical price data and forecast for Filecoin suggest a bearish trend in the short term. The 2-week price change shows a downward movement, and the forecast predicts further declines over the next week. Considering the price forecast, support, and resistance levels, a short position in Filecoin appears to be the most suitable strategy. To execute this strategy, an entry price of $4.95, aligned with the current price and the predicted downward movement, would be appropriate. A stop loss should be set at $5.02 to limit potential losses if the price unexpectedly surges. The target price can be set at $4.75, slightly above the lowest forecasted price, allowing for a potential profit while minimizing the risk of a significant price reversal. This short-term strategy aims to capitalize on the anticipated decline in Filecoin's price. Given the price trends and forecast for Conflux, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend, with the current price hovering near the support level of $0.1398. The forecast suggests a continued decline in price, reaching as low as $0.141. The resistance level at $0.1673 indicates a potential ceiling for upward movement. In this scenario, a short position is advisable to capitalize on the anticipated price decrease. An aggressive short-term investment strategy could involve entering a short position at $0.157, the current price. The stop loss should be placed at $0.161, slightly above the current price to protect against unexpected price surges. The target price could be set at $0.148, aligning with the lowest forecast price, allowing for potential profit taking before the market potentially hits the support level. This strategy aims to capitalize on the short-term downward trend while minimizing risk. Based on the provided information about Ethereum name service, a short-term bearish investment strategy appears most suitable. The 2-week price history reveals a downward trend, with the recent forecast suggesting further declines. The current price sits near the resistance level of $42.53, indicating potential for a pullback. Therefore, an entry price of $37, aligning with the recent price fluctuations, would be ideal for a short position. The stop loss should be set at $38 to limit potential losses if the price unexpectedly rises. The target price should be set at $32, taking advantage of the potential price decline towards the support level of $32.88. This strategy capitalizes on the short-term bearish momentum indicated by the price history and forecast. Given the price trends and forecast for Avalanche, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the current price close to its forecast and near the support level of $35.47. The resistance is at $41.24, indicating that there is limited room for upward movement. In this scenario, a short position is advisable to capitalize on the potential for a price decrease towards the support level. For a cautious short-term investment strategy, an entry price of $37 would be ideal, aligning with the forecasted price. The stop loss should be set at $38 to protect against any unexpected price recovery. The target price should be set at $35, slightly above the support level, allowing you to take profits before the market hits major support at $35.47. This strategy aims to capitalize on the potential for a short-term price decline while managing risk effectively. Based on the provided price history and forecast for Bitcoin, a cautious medium-term investment strategy appears most suitable. The recent price action shows some volatility, but the overall trend hasn't been decisively bullish or bearish. The forecast suggests a slight downward movement in the near term, hovering around the $0.045 to $0.046 range. Considering this, a long position might be risky at current prices. Therefore, a more prudent approach would be to wait for a pullback towards the support price of $0.02422 before entering a long position. This provides a wider margin of safety and allows you to buy at a potentially more attractive price. Setting a stop loss slightly below the support level, around $0.023, would further mitigate risk. The target price could be set around $0.051, aiming for a potential upside move towards the resistance level of $0.04723. This strategy balances risk and reward, allowing for potential gains while minimizing potential losses in the medium term. Based on the provided information for PENDLE, a cautious short-term investment strategy appears most suitable. The 2-week price change demonstrates a slight upward trend, but the 1-week forecast suggests a potential decline. The support price at $4.111 acts as a floor, while the resistance at $5.069 presents an immediate hurdle for further upward movement. Considering this, entering a short position at $4.95, near the recent high and the forecast's initial dip, presents a compelling opportunity. To manage risk, a stop loss should be placed at $5.069, above the current price and the resistance level. This will limit potential losses if the price unexpectedly surges. The target price can be set at $4.111, aligning with the support level and offering a reasonable profit margin. This strategy capitalizes on the potential for a short-term decline while mitigating risk through a well-defined stop loss. Given the price trends and forecast for the sandbox, a medium-term investment strategy appears to be the most suitable approach. The historical price data shows some volatility, but the overall trend appears to be sideways to slightly bearish. The forecast indicates a potential dip in price over the next week, suggesting a cautious approach. However, the support price at $0.5423 provides a potential buying opportunity if the price drops. Therefore, a long position is recommended with an entry price around $0.550, slightly above the current price and below the forecast low. A stop-loss order should be placed at $0.5423 to limit potential losses if the price falls below support. The target price can be set at $0.636, which is the recent high and aligns with the potential upside suggested by the forecast. This strategy aims to capitalize on a potential rebound in price while managing risk through a well-defined stop-loss order. Given the historical price data and the 2-week price forecast for Decentraland, a short-term bearish strategy appears to be the most suitable approach. The historical prices show a fluctuating trend, but the forecast suggests a consistent downward movement. This indicates a potential decline in the price of Decentraland in the short term. Therefore, an investment strategy involving a short position is recommended. An entry price of $0.495 aligns with the current price and the forecasted decline. A stop loss should be placed at 51 cents to limit potential losses if the price unexpectedly rises. The target price should be set at 47 cents, aiming to capture a portion of the anticipated price decrease. This strategy focuses on capitalizing on the short-term bearish trend and aims to generate profits within a relatively short time frame. Based on the provided information for ENG Coin, a short-term investment strategy appears to be the most suitable approach. The historical price data shows a fluctuating trend with a slight downward bias over the past 2 weeks. The forecast price also suggests a continued downward movement, with the lowest point reaching $0.205. This bearish outlook, coupled with the fact that the current price is relatively close to its recent high, suggests that ENG Coin might be ripe for a short-term correction. Therefore, a short position would be advisable for an aggressive investor seeking to capitalize on this potential decline. An entry price around $0.225 would allow you to enter the trade near the current price while staying above the immediate support level. A stop-loss order placed at $0.235 would help mitigate potential losses if the price unexpectedly surges. The target price could be set around $0.205, aligning with the lowest forecast price, allowing for a potential profit before the price potentially rebounds. Given the price trends and forecast for Uniswap, a conservative investment strategy would focus on a short-term approach. The historical prices show a relatively stable trend hovering around $13, with the current price close to its forecast and near the support level of $13.018. The resistance is at $13.564, indicating that there is limited upward potential. In this scenario, a short position is advisable to capitalize on the anticipated price stagnation or potential minor decline. For an aggressive short-term investment strategy, an entry price of $13.10 would be ideal, slightly above the current price to allow for a small margin of safety. The stop loss should be set at $13.30 to protect against any unexpected price surge. The target price should be set at $12.90, anticipating a minor price dip before the market stabilizes. This strategy aims to capture a small profit from the limited upward momentum and potential for price consolidation. The current price trend for Chainlink shows a downward trajectory with the forecast indicating further declines. The historical prices suggest a consistent downward movement over the past 2 weeks. The forecast predicts a price drop from the current level to as low as $19, while the support price sits at $19 and resistance at $22.09. This bearish outlook in the short term makes a short position the most suitable strategy to capitalize on the anticipated decline in prices. An aggressive short-term investment strategy would involve entering a short position at $22, with a stop loss at $23 to limit potential losses. The target price should be set at $19.50, allowing you to take profits before the market potentially hits the support level of $19. This strategy aims to profit from the downward momentum of Chainlink while managing risk through a defined stop loss. Based on the provided price history and forecast for Aave, a cautious medium-term investment strategy appears most suitable. The historical data reveals a fluctuating price trend with periods of both upward and downward movement. The forecast suggests a slight upward trajectory in the coming week, but it's not a dramatic surge. Considering the support price at $171.82 and the resistance price at $354.75, a medium-term approach allows for potential profit-taking while minimizing risk. Therefore, a long position is recommended with an entry price around $330, aligning with the current price range and recent historical lows. The stop loss should be set at $315 to protect against significant downside movements. The target price could be set at $350, aiming to capitalize on the potential upward movement predicted by the forecast while staying below the resistance level. This strategy allows for a balanced approach, aiming for moderate gains over a period of several weeks, while mitigating potential losses. Based on the provided information for EOS, a short-term investment strategy appears most suitable. The 2-week price change demonstrates a fluctuating trend, with recent prices hovering around the support level of $0.7713. The forecast suggests a slight decline over the next week, with prices potentially falling to around $0.805. This indicates a potential opportunity to capitalize on a short-term price dip. Therefore, a short position is recommended. An aggressive entry price would be 84 cents, slightly above the current price, allowing for a small buffer. The stop loss should be set at $0.8697, the resistance level, to limit potential losses if the price unexpectedly surges. The target price could be set at $0.775, aligning with the support level and allowing for a decent profit margin if the forecast holds true. This strategy prioritizes capitalizing on the anticipated price decline within a short time frame, aiming to exit the position before any potential rebound. Based on the provided Tron price information, a medium-term investment strategy appears most suitable. The historical price data reveals a slight upward trend, with recent fluctuations hovering around the 25 cents mark. The forecast predicts continued growth, reaching $0.267 within the next week. This suggests a positive outlook for Tron in the short to medium term. Considering this, a long position is recommended. An ideal entry price would be around $0.255, slightly below the current price, allowing for a potential entry point after a minor pullback. The stop loss should be set at $0.2444, the identified support price, to minimize potential losses. The target price could be set at $0.2594, the resistance level, aiming to capitalize on the anticipated upward momentum. This strategy balances risk and reward, allowing for potential profits while safeguarding against significant downside movements. Based on the provided data for Suncoin, a medium-term investment strategy appears to be the most suitable approach. The historical price data shows a generally upward trend, with recent fluctuations around the $0.024 mark. The forecast prices suggest a continued upward movement, potentially reaching $0.0245 in the coming week. Considering this outlook, a long position in Suncoin is recommended. A suitable entry price would be $0.0238, aligning with the predicted price trajectory. The stop loss should be set at $0.023002, the support price, to minimize potential losses. The target price could be set at $0.024662, the resistance price, aiming to capitalize on the anticipated upward momentum. This strategy allows for potential profits while mitigating risk through a well-defined stop loss.